Hey, how's it going, everyone? So today we're actually going to be doing my portfolio stuff on my app actually, and not on the computer desktop. So it's going to look a little different, as you can see right over here. And we're going to kind of go through some things, see how the portfolio is doing, and see how we want to kind of either change things up or continue kind of going with the flow. Now, before we actually go through the video entirely, this is the first time I'm doing it this way. I probably won't do it all the time, but quick question for people in the comments. Do you prefer this option with the moving background with the graph, or would you prefer something a little bit more static like this option right over here? Let me know in the comments. You can do either the static white page or the moving, red and green page. Just kind of helping me out when it comes to knowing what people like as far as the background movement. But for now, we're just going to keep the static white page right over here and kind of go through this. So if you haven't been following along before, this is my portfolio. We're currently sitting at 67,000, almost 67,700. In our all-time, we're actually back in the green. You can see we're up $322. Most of that is actually thanks to dividends. So you can see right over here towards the center, it says total dividends or total gains. The market is actually, we're still down negative $673, but with dividends, we're plus $996, which, by the way, almost at 1,000 total earned dividends. Really, really cool. So our dividends have now kept us in the positive, which is really great. We had gone into the negative recently, which was kind of cool to see. Obviously not great, but it was just interesting to kind of get to that point. You can see in our all-time, our growth stocks right over here are actually down still pretty significantly. Our retail's down just a little bit. It's had a nice comeback. Our tech is still in the positive. This thing has been really killing it when it comes to staying in the green. You can see our industries and energy sector is still in the green. Our retail has taken a massive hit. And then you can see over here in our finances, we're still down pretty heavily. Now, in our finances, a lot of this has to do with Block, which is the owners of Square. You can see that's the majority of the downturn on this sector right over here. But surprisingly, even Visa is not doing so well in the portfolio. You can see we have just under 10 shares in this. Current value is 204, and then you can see our average share price is 212. So kind of interesting take on that. If we look at our dividends, we've only earned 13.79 so far. They are not a high yield dividend, but they do increase their dividends pretty or not frequently, because they do it once a year, but they do it with a large number percentage. So we'll see how that plays out if we're going to keep that in the portfolio. You can see here with real estate, right now we have Airbnb, which I know doesn't pay out a dividend currently, but it has definitely taken a big toll in the account. New residential investments, so NRZ, has actually been keeping up really well in comparison to a lot of other stocks. Just even during this time in the market when everything is downturning, NRZ has kind of held up. Like, I'm really impressed with it. So you can see we own 130 shares at 965. Current price is 1121. But if we actually look at our total gains, we've actually earned almost as much in our dividends, which is 155, as we have in just market gains at almost $200. So really happy with the performance of this one. You can see Digital Realty Trust right over here. We're actually down almost $100 on this one here. Even though we have earned some dividends, it's definitely not been enough to offset the actual losses that we've been taking. And then in our industries right over here, you can see Next Air Energy is down about 5% overall. But we have Texas Instrument back in the green finally. And then Lockheed Martin definitely in the green here. And I always like to bring up, for those who have been either watching for a while or know about it, Lockheed Martin is back in like October, November time, was down significantly, even from my average share price of $358. And I was buying as much as I could in that time frame to get more value out of it, because it was so down in my portfolio, and now it's performing as one of the best during this downward market. So it's kind of interesting. That's the way I like to look at it, is when I'm investing during that time, which stocks are in their 52-week lows and which stocks are at their 52-week highs, because I'll focus on the ones that are at their 52-week lows and kind of ignore the ones that are at their peak at that time. So you can see Microsoft and Apple have definitely helped this portfolio. Apple's done quite a bit better, even though they're at 50 and 50 as far as target prices or target percentage of the portfolio. So we have about 47 shares, almost 48 shares of Apple. So pretty exciting there. And you can see we've earned about $56. They're also not a high paying dividend as far as their current yields, but they do increase a decent amount every year, except for this one most recent one. I'm honestly a little disappointed. I was hoping for a better increase. I think too much news has passed since their last one, but I think it was like 5% increase, which, come on, like I was hoping for, something closer to 10. I don't think it even kept up with, the current rate of inflation. Microsoft, we just hit a nice round 28 shares in this company right over here. And we can take a look, and you can see obviously market gains have been great. Earned dividends have been pretty good as well too, but again, low yield when I was purchasing, and hopefully over the next 10, 15 years, we're going to see some of those nice dividend increases that will have a huge impact down the road. Right over here, we got Home Depot. Home Depot is, I believe, still technically, we're still down on overall. You can see here we own about 20 shares. This has been the stock, I think, from all of my stocks in the portfolio, I've been really putting a lot more into because it's down in its 52-week lows, but I believe the fundamentals are still there. Numbers look great and everything else. So you can see we earned almost $100 in dividends. We're down about 161 overall in the actual in the market. So total gains is only negative $64. But again, this is one of those stocks that I think in about a year or two, we're going to look back and people are going to be like, man, I wish I bought it at $300. Like I wish I was putting money in. And you can see my average share price is $308.96. So every time I'm buying right now, we are buying under the average share price. So that's helping lower it, which that's not that big deal. I just want to keep getting that share number up higher and higher. You can see about 20 shares there. It is looking really nice. Now, before we continue on, if you are getting value out of this video, make sure you hit that like button down below. And honestly, if you're getting some great value out of the video and want to help support the channel, you can hit that thanks button as well. Ross has taken quite a bit of a hit. It's kind of gone up and down. There was a little point in time here during this downward market where Ross actually went above, at least for me, above my average share price, and then it trickled back down to, you could see, about $93 per share. So for me, I got about 54 shares in this company. Their yield is really low, but they do increase pretty significantly every year as far as percentage goes. I'm down about $738 after including dividends, but I believe in this company. I know they're actually opening up a decent amount of stores over the next year as well. I love shopping there. I actually pay attention a lot of times when I'm at the stores of like how busy it is, their inventory, just kind of keeping up to date with things as well as the news. And then of course we got Costco right over here. So Costco has been doing pretty well. It has come down from its 52-week highs. As you can see, current price is $4.90. My average is $4.24. I only own about 7.64 shares of Costco. I slowed down on buying them as they were approaching that 52-week high. I believe a lot of people were probably still buying in. And again, I was slowing down because I was putting most of my money into Home Depot versus Costco at that time. And then if we go to our growth stocks here, we're going to see a couple of different, positive and negative things here. You can see Google, we're actually only positive $7.10. So, by the way, I know all four of these companies don't pay dividends, but what I like to mention is that either they will be paying dividends in about 14, 15 years when I want to start actually utilizing that money, or I can sell them off for the profit and then use that money to buy into stocks that are paying about 4%. But anyways, you can see here we own about 2.25 shares before the stock split, which I believe they were doing 20 to 1. So you can see here I've been buying a lot more of Google over this time period as well, just because I feel like the value that I'm getting right now is great, and I don't see them going too much lower. And even if they did, I would keep on buying because I could definitely see them getting up there in price, especially after the stock split. Because once the stock splits, people have option trading available. Some people will actually be able to buy at that price point, because even though I can do fractional shares at that 2,300 price point, which is phenomenal, because I wouldn't have 2.25 shares if I couldn't do it. Some brokerages actually don't have fractional sharing available, which, in case you want to check out M1 Finance, which is the platform I'm using here, I'll have them linked down below. I absolutely love using them as a long-term investor. I honestly feel like I get the most value out of it, and it keeps me from making impulsive decisions when it comes to investing. So check out that link. It helps support out the channel, but you also get some free bonuses for using that link as well, which is always really cool. So you can see here, Tesla, we are still up pretty significantly on them. I own 5.10 shares, currently at 761 price point, and average price is almost 560. I have been buying a little bit more of Tesla. I try at least every month to buy $25 to $50 worth, which I know is not a lot, but even when it's at its highs or lows, like I'm just putting a little bit of money in. I believe the company has some great value to provide for people long term. I know they've been kind of up and down with everything going on, but if you look at their reports from Q1 of 2022, things looked great, and it's only going to get better as more of those factories open up. And then right over here, you can see with Amazon, we're actually down significantly with Amazon. So we own 1.63 shares. You can see my average share price is $3,065, and it's currently trading at $2,307. So this has definitely taken a huge plunge over the last couple of weeks. You can kind of see the chart towards the top there. For me, honestly, I'm not worried about it being down. I'm actually hoping to try to put more in. I've been putting in about like $100 every week or so for the last few weeks as that price has gone down. I just see with Amazon and all of its avenues that it has for it to obviously come back and then have even better growth over the next couple of years. So we'll see how this does long term, but they are also doing a 20-to-1 split. So, you can take that 1.63 and then we're going to have quite a few shares once that goes through. Obviously, the number of shares is not going to change, or the fundamentals don't change when they do stock splits, but again, it does help when it comes to option trading, and people who didn't have access to fractional shares will have better chances to be buying Amazon. So that's going to help it too. And then you can see here with Facebook, we have about 15.84 shares, average share price of almost 250, and it's currently at 202. So it's kind of been hovering around 200, give or take, for the last little while. You can see here we've been definitely putting in quite a bit because you see that graph just kind of going almost straight up there. And that's because I do see a lot of potential with Facebook, even though I know some people don't like Facebook themselves. I know with Meta, there's different things and possibilities. Their cash flow is just insane. I think that there's still a lot of great opportunity for them to do some interesting things. And if they invest properly and, either the metaverse is a big thing or whatever else they're working on, takes off, that can be a lot of value for stockholders. So just something to consider when it comes to, looking at companies that either maybe you don't personally use, but consider that they have a lot of value to give into the marketplace. And again, this is just how it's been kind of going with this portfolio. Not a lot has changed as far as the number of companies that I own. I'm still at 19 here overall, and I don't really plan on adding other companies too much here or taking them away. But of course, if you are following along by hitting that subscribe button, you will see the changes happening in real time with this portfolio. Now, what I want you to do is actually click on this next video right over here on screen so you can keep learning and growing with your investing. My name is Dennis, and I'll see you in that next video.